the future of Netflix. Let's bring in Motley Fool Asset Management portfolio manager Shelby McFaddin, who names the original streaming platform one of her top picks, and it's been a huge performer for the markets. Netflix has been successful because, as I said, king of streaming, and that's a fair assessment. Thing is, Shelby, many market watchers were pretty surprised by Reed Hastings submitting the fact that he's leaving. I wouldn't say his resignation, but he's leaving. Do you think this is because of the Warner Brothers Discovery debacle?
Right now, we're not reading too far into it, and the short first answer is no. Not thinking that this is anything sort of reactionary. 30 years is an incredible career, especially with this type of company. What he's been able to accomplish is amazing. So being able to just step away and trust the succession process is actually something we really like to see in companies. We have seen in other companies we won't name where there's not as much trust in that succession, and there's a sort of teeter-tottering on, can I leave, should I stay? And so right now, not really reading into it as something that would tell us the company is failing, and so he wants to have a big exit. Not seeing it that way.
Shelby, if you want to name those companies, you go right ahead. It's a Friday, so, feel free.
I've got legal and compliance to deal with.
I got you. Let's talk about the market. I mean, what a day. The market has been so headline driven, and I know that it's been frustrating for people like yourself and many, because while on the one hand, you're trying to play the volatility and you're looking for opportunity, the headlines are so fast and forthcoming. This is now 7 weeks of this, Shelby. Are you finally feeling, based on what you're seeing and you're hearing from the president, the Iranians, the negotiations in Washington, are you finally feeling like we might be nearing an end and we might be ready for the Strait of Hormuz to go back to normal operations?
It does seem like we could be getting close. One thing I feel a little bit more confident on is that we have a general idea of what the market bottoms are when it comes to any headlines around the conflict. So when we were watching from the sort of end of February through the end of March, a lot of folks were expecting, we're going to get down 15%, 20%. We got down about 9. And then from the end of March to where we are now, recovered, I think at the end of the trading day today, will probably be close to like 13, 14%. And so we've kind of seen, okay, when we are at an absolute crosshairs and it is looking as bad as it's looked thus far, the market is really only saying 10% off. So do we feel a little bit more confident that negotiations might move better in the coming weeks? Sure. But I feel probably the most confident in what the market is saying is their absolute lowest point with this in mind. Economic data, slightly different story.
Is that because of the inflation reads that we've gotten thus far, or are there other pieces of data that you've been watching?
I would say consumer sentiment is something that there's a teeny bit of concern about for me. So right now, folks are saying we've been able to manage. We've gone ahead and adjusted our appetites, our budgets. But looking forward, people are, there's a little bit of trepidation. We do have, of course, the increase in tax refunds that is able to fund a good bit of the step up in price level that consumers have experienced this spring. And hopefully it won't have to sort of absorb all of that spillover, and households will be able to have a little bit more cushion going into summer.
But you also make the point, and I'm just going to read your own words back to you, investors don't appear eager to move to the sidelines. That's a perfect, simple way to characterize the way that these markets have behaved. The initial shock of the attack on Iran, nearly 7 weeks ago, that was one thing. But the blockade starts Monday. The blockade of the Strait of Hormuz shut down, and the markets powered higher on Monday, and that didn't stop. Yep. So no one wants to be out of the party.
No, and it comes down to a couple of things. One we call the TINA concept. There is no alternative. And the second, it's more of a 1A, is let's remember where cash is. So a couple of years ago, you could look at cash rates being 5+ and say, you know what, I am going to take a step out because tech is swinging all over the place. I don't want to be a part of this. I want to get my 5% and I want to go. And as interest rates started to come back down, investors really needed to think about being risk on. And then you add on top of that the compounding nature of what these AI-focused companies have been able to deliver. And there is really not a reason to be pulling everything out and stepping away. Diversifying, sure. Tilting for different factors, absolutely. But stepping out, it's a big risk right now.
All right. Shelby McFaddin, well said. Great to have you here on this Friday. Really appreciate it.
Of course.